Welcome everyone, my name is Mike Hamilton from Trade the Easy Way, and just going to give you my midweek update. So we've got US monthly jobs on Friday. I just put this little graph in here. This is obviously the COVID shock. We saw this bounce, but the growth in jobs has been slow. So we are expecting a better number on Friday, but I think, which I'm pretty sure we'll see, but we need a healthy development, healthy growth if this market is going to be sustainable up here. Biden's stimulus package has got to go through the Senate, and we are potentially looking at another week or so, middle of the month, before that hits us. So what does that mean for the markets? Let's go to the charts. So this is the NASDAQ daily. What the NASDAQ does, the rest of the market tends to follow. So you can see we popped out of this area a couple of times, and we just last week popped underneath it, but we're back inside this funnel pattern. So what I'm looking for is to see if this is going to pop back outside of that area. So we're in this little squeeze pattern here. If you're a Head and Shoulders fan, then you see this is a potential Head and Shoulders pattern with the shoulder. Whoops, let me get the right pen. Potential with the shoulder, head and the shoulder. So we need this to hold and to close above this area here, which is about 13,300 at least. Otherwise, if we come out of this, then we are going to continue to fall, and I think we're going to potentially, if we do come out of that, I think we'll find levels right back down to 11,000 if we come out of that. So potential bull flag, potential Head and Shoulders, whatever you want to call it, but it's a squeeze. The bottom line is, as far as I'm concerned, it's a squeeze, and this needs to fire up if these markets are to be sustainable. The case for the downside is the fact that we're under these two averages, and these two averages are potentially going to cross. So if they cross the downside by this falling, then hold on to your hats. In contrast, it's 6:45 Eastern Time, 11:45 UK time in the morning, Wednesday morning, and you can see the Dow has come back into this range and is right on the high of this range. So yeah, you can see that is a pinnacle point there. We need to fire up through here to sustain this and go and see if we, next stop is 32.5, 32.6 if we can pop up. If we start closing lower, then this could tumble all the way back down to here. Alright, volumes are not great. Yeah, we came down on significant volume here, but I think the market needed it. At the very least, we're doing nothing up here, and often if a bullish consolidation concludes with a dip like that to get the volume back in. So we are poised to see some further upside, but obviously we've not got confirmation. The DAX, however, is already this morning, has come into this dip and has pushed higher, and as I speak is right into above this pink zone. So this was a major problem for the DAX. It's through and through. So we have 1, 2, 3 attempts, and the fourth attempt, through and through, has got us through this resistance. So as long as we can hold up here, I think next stop is 14.5 on the DAX. Alright, so maybe the DAX is leading on this event, and the NASDAQ and the US markets could follow. Let's have a look at the FTSE. Similar to the DAX in that we are above this area of support, poking up. So we've had a 1, 2, 3 wave to the upside, a 1, 2, 3 wave pullback, and we've got this basing pattern. We're above this squeeze, so in theory we could come back to 6,800 and then march onwards up towards 7,000. UK budget today, so extra stimulus appears to be about to be launched. Continual support for furlough and unemployed, so in theory that could lift this up. That's what's driving this market in these conditions. you know, the incredible amount of stimulus that is hitting this market and liquidity in stocks. Talking of which, let's have a look at a few stocks. So we've got the likes of BT having dipped. So we've got so a nice little run up here. 1, 2, 3, 4, 5. 1, 2, 3 wave pullback. 1, 2, 3 wave into resistance. Now we pull back again, but you know, we're holding this trend line. We've not closed underneath this trend line and potentially coming through this 125, 127 mark to come and visit some of these highs again. Okay, so again, this has got some resistance up here, but the path of least resistance at the moment is up. I think this is a good bellwether in the UK. This is Barclays, and yeah, we are sitting up very nicely, making a new 2021 high here with the potential to go to 180 plus. Okay, we're coming up a little bit concerned about the volume here because the volume is slow. We are getting a bit rich, a bit expensive, but nonetheless, no denying that the dips are at the moment getting bought, and this is in breakout territory. Okay, I will give you a list of stocks that I'm in and interested in rather than sit here and create a long video. So I'll leave it there and look forward to the next update. The next update is going to be Sunday, so we're going to wait until I get non-farm payroll out of the way, see what the market is going to react. But at the moment there is certainly no reason to sell. Thank you very much. Bye for now.